Hey there. If you've ever started a business or even just a little side project, you know the feeling. Money's coming in, money's going out, and you're kind of hoping it all works out. Well, today we're going to change all that. We are going to take that financial chaos and turn it into crystal clear clarity. Let's get into it.
I mean, this is the big question, isn't it? It is so easy to confuse being busy with being successful. You could be working around the clock, you're making sales, you're paying bills, but are you actually making money? That's the core problem that a real accounting system is designed to solve, once and for all.
So here's our game plan. We're going to start with that feeling of chaos and see exactly how accounting brings clarity. We'll nail down its real mission, then we'll get into the non-negotiable rules and the professional guidelines that steer the ship. And finally, we'll see how it all clicks together to become a global language for business.
Right. So every business starts right here. You've got invoices flying around, receipts piling up, bank transfers. It's this whirlwind of financial activity. And honestly, it all just feels like noise. It is practically impossible to know how your business is really doing just by peeking at your bank balance. And this is the absolute heart of the matter. Without some kind of structure, you are just flying blind. You might feel successful because you see cash coming in, but hey, that cash could be needed for a big bill next week, or maybe it's covering up a bunch of hidden costs. We need to turn that noise into a clear, reliable signal.
So how do we get that signal? Well, the answer is accounting. And let's be clear, this is so much more than just bookkeeping. It is a powerful, elegant system designed to bring order and, most importantly, meaning to all that financial noise.
Okay, look closely at this definition. Accounting is basically the language of business. It takes every single financial thing that happens, a sale, a purchase, paying a salary, and it translates it into a story that you can actually understand. And it does it through these four key actions: recording, classifying, summarizing, and interpreting. This process right here is where the magic really happens. First, you record everything, no exceptions. Then you classify it all. Put it in the right buckets. This is sales revenue, that's an office supply expense. Next, you summarize it all into simple reports, like an income statement. And finally, and this is the best part, you interpret those reports to figure out what's going on and make smarter decisions.
And this is the payoff. Why bother with all that? For these four things right here. You get organized records, so no more shoeboxes full of receipts. You can tell definitively if you made a profit or a loss. You get to see your true financial position, what you own versus what you owe. And all of this gives you the hard data you need to actually lead your business.
All right, now to make sure everyone is speaking this language of business the same way, there have to be rules. Think of these principles as the grammar of accounting. They are the non-negotiable laws that make sure the financial story is told accurately and consistently, no matter who's telling it. This is rule number 1, and it is absolutely crucial. The business's money is not your money. It's like having two separate wallets that can never, ever mix. You can't pay for your personal groceries out of the company account. This rule creates a firewall between your personal finances and the business's finances. Simple as that.
This rule is all about thinking long-term. We just assume that business isn't going to shut down tomorrow. And because we assume that, it lets us do things like spread the cost of a big piece of equipment over several years. It's the principle that makes long-term planning and investment even possible.
Okay, this one is a game changer. It's all about recognizing the difference between earning money and actually getting the cash. So if you do a job for a client in December, you earn that revenue in December, right? Even if they don't actually pay you until January. The accrual concept says you have to record that sale in December. This gives you a way more accurate picture of how you performed that month. And this rule works perfectly with the last one. If you spent money on ads in December to get those December sales, you have to record that advertising expense in December too. You match the effort with the result in the same period. That's how you know the true profitability of what you did.
And this one is all about fairness and honesty. You can't just change your accounting methods from year to year to make your profits look a little better. This rule forces you to stick with the same methods, so when you compare this year to last year, you're actually comparing apples to apples.
Okay, so if the principles are like hard and fast laws, think of conventions as, well, more like professional customs. They're the guidelines for those gray areas where you have to use your judgment, and they make sure the story you're telling is not just accurate, but also fair and reasonable.
These conventions really guide an accountant's judgment. Prudence basically means don't get ahead of yourself. Recognize losses, but don't count your chickens before they hatch on profits. Materiality means focus on what's big enough to actually matter. Full disclosure is about being transparent, no hiding important details. And substance over form means you look at what a deal actually is, not just what the paperwork calls it.
So we have rules and guidelines for one business. But what happens when a company in Germany wants to attract investors from Japan? In our totally connected global economy, we need everyone, everywhere, to be speaking the exact same financial language.
And that is exactly where things like the International Accounting Standards, or IAS, come into play. They're a common set of rules designed to create consistency across the whole world, so an investor in Tokyo can look at the financials of a company in Berlin and know precisely what they're looking at.
And here are just a couple of quick examples to make it real. IAS 1 is basically the universal rulebook for what a financial report has to include and what it should look like. IAS 16 gives everyone the same exact rules for how to account for big physical assets, like buildings and machinery. It's all about creating one single, reliable rulebook for the entire world.
When you really get down to it, that's what this is all about. We started with chaos, remember? Just a bunch of noise. But by applying these rules, conventions, and standards, we've turned all that raw data into a powerful story. A story about your business's journey, its wins, its challenges, and its potential.
So here's the big takeaway. Accounting isn't just some boring chore you have to do. It is the single most powerful tool you have for understanding the truth about your business. It gives you the clarity you need to make great decisions, to plan for the future, and to finally know if you're just busy or if you're actually building something profitable that's made to last.
And that's the question I want to leave you with. You now know the basics of this language. You have the tools to start listening to what your business has been trying to tell you all along. So what story is waiting to be uncovered in your financials? Thanks for joining me.